Greetings, this is Dr. Jeffrey Scott, and this is my weekend market update for July 10th, 2022. I titled this week's edition as Will the Current Rally Overcome Resistance Ahead? And I'll share with you my thoughts as we go forward. My email address is hgsidoc@gmail.com. If this is your first time to watch this on YouTube, hit the subscribe button and the alarm if you want to be notified when I do this again, which is typically every weekend. And I'll talk about my daily video site in a few moments. Thumbs up, thumbs down based upon your feelings would be appreciated, and any comments as well. Disclaimer, this is for educational purposes only. Anything I recommend should be considered in the spirit of education and not investment advice. I am a doctor, not a broker. Tools demonstrated are those that I use in my daily trading. I've paid for those tools, and trading involves risk, and you are solely responsible for any investment decisions you make. All right, so I have X's here because by the time you're seeing this, it's probably less than 1 day and 10 hours, since the clock is ticking every moment. But the Wealth 365 event is on Monday through Saturday. I'll be speaking on Wednesday and then again on Saturday, both at 11 a.m. I'll be sharing my approach to trading while being a busy professional. I'll show you some of the tools that I use and some of the principles behind what I do. If you have not registered, here is the URL, and as I've mentioned before, if you don't have wealth charts, it's probably the best time of the year to purchase it, and there'll be, I think now, over 60 different educators presenting what they do, and many of them will have opportunities, I believe, for purchase. And lastly, I do these daily. The weekend that I post on YouTube is typically 40 to 70 minutes long. I post something daily which is less than 10, usually closer to 5 or 6, and you can find those at stocksanddocs.com. They're posted sometime in the morning on the market day in question. So enough of the PowerPoint. So let's kill that. Boom. Save. And now let's take a look at the markets. Now, you'll notice that I use a spreadsheet here, but what I've done is cut and pasted from a number of different programs to speed up this presentation. These are a couple of sheets from HGSI, and they're called warehouse views, and I use them to get a sense of what's going on in the market. First thing is, in green are highlighted the major indices, so the Dow, NYSE, Spiders, Qs, Russell 2000, and the NASDAQ Composite. And the first thing that I would point out is that they all were green over a 5-day period of time. But since this was a 4-day week, the 5-day period of time actually includes the prior Friday, which was a strong bullish day. So they're all probably from a Tuesday through Friday would be less than the numbers you see here. In fact, if you look at the Fridays, Friday was a day where breadth was kind of weak, where advanced decliners were negative, and you could see the Dow, NYSE were down a tad, as was the S&P 500, and then the one thing, NASDAQ Qs were up a tad, as were the NASDAQ Composite. But on the week, it ended up a strong week, despite the fact that Friday was relatively flat. What was working on the week? The dollar was up big, which is typically not what you want to see if you're bullish the market. We did see some easing again in commodities, although there was a rebound on Friday. Gold was continued to be weak, as were treasuries, and then silver as well as gold was weak. What was really strong on the week was kind of what you might call junk off the bottom. ARK Innovation ETF was up 17.5%, and the IBD 50 1.4. Again, this is 5-day return, and we know this was a 4-day week, so this is including what happened on the prior Friday. The other thing to point out, if you look at the green lines here, you can see the major indices have been up now for 21 to 22 days. And if you look at the days of the low, you could see we're about to lap a month from the prior lows, and the returns have been as much as 10% on the NASDAQ composite. So this bounce has been more than just a little bit in time and and amount, but remember this is still a dead cat bounce, a bear market rally, or a bull trap, whatever word you want to use, until proven otherwise. If we look at the sectors, you could see that the sectors that led on the week, healthcare remained strong, um, financials, which have been weak, technology, discretionary, and communication. And I'll show you within wealth charts that perhaps we've got some market rotation. Now, I mentioned that despite the relatively good week that we saw in the markets, when you look at Friday and you look at sectors, ADs, industry groups, and stocks, 73% of the sectors were down, 66% of the industry groups, and 63% of the stocks. So it was a weak day on Friday from a breadth perspective. Between Thursday and Friday, the number of stocks trading above the midline of their Bollinger Bands dropped. And if we look down here, you see kind of a fat bell-shaped curve with very few stocks at the extremes. Again, this is Friday's numbers here, which were weak. Over 2 days, it was stronger. But on the week, you could see 73% of the sectors were up, 70% of the industries, and 69% of the stocks. Over 2 weeks, all the sectors and a high number of stocks and industry groups were up as well. Looking back further over a month, you could see we've emerged from a much weaker time, and then despite the strong 10 days that you see here, the prior 2 weeks were so bad that it's pulled these numbers still to the red. Warehouse report here takes all the stocks in the in the database of EdgeRater, actually, and it asks the question, how did stocks do based upon ERG, which is EPS rank plus relative strength and group rank. And I run this on the prior Friday, so on the Friday before July 4th, so that would have been 7/2 from a fundamental perspective, and what happened a week later, what were the returns. And the first thing you could see is that for the most part, stocks that had lower ERG outperformed, which is interesting because I thought the market felt stronger than this, but it's probably because I own a lot of biotech. So for the most part, earnings per share rank, although the numbers were plus, stocks with no earnings actually outperformed. Relative strength, stocks with poor relative strength outperformed. So this is why I kind of called it a junk off the bottom rally. And again, when you see ARC with a double-digit return, it sort of suggests that some of the fallen angels were leading. If we look at the markets, and first thing I'm looking for Hindenburgs, which we don't expect to see until we get back towards new highs, so that's not an issue right now. And we look over here, and the most important thing that I see here is we really dropped in the number of new lows. So perhaps we're going to start to see the market stop with so many more sellers than buyers because it's been the new lows that have been dominating as much as the lack of new highs. So not many new highs or new lows. The most important other thing here is the weekly bongo, which is sort of my long-term buy-sell signal, remains in a sell mode. If we look here on the chart, you could see that as the market rolled over, sorry for where that graphic is, the bongo turned red up near the high on the weekly bongo, and it's been red for the entire downtrend. How much would this have saved you had you known that when the weekly bond goes red, it's time to lighten up and protect yourself? If we look at the NYSE, still seeing some new lows, not seeing any new highs. The weekly bond goes red, and this little green bar here is called a Eureka, and this occurred on Thursday, and that's a bullish it's sort of a bullish follow-through day for fans of Ian Woodward, which was devised to be a different way of coming up with that than the traditional William O'Neill IBD way. But still, a weekly bond goes red. The buckets, which we looked at previously, improved compared to a couple weeks back. This was the first of, of July, so we've improved over the last month. And you could see what bad looks like. This was June 17th when we were near a bottom. And you can see that in the S&P 1500, 62% of the stocks here, except 8/3/2012. That is not the right date. So let's ignore this thing here. I don't know how I popped that up because we already know from looking at the Q tools that this is, nope, it's not August 3rd, 2012. That is not what we're seeing. We knew from the Q tools that the buckets look like this and like this. So sorry about that. Didn't catch that earlier. Energy on the week, you could see some improvement in gas on the week, although it was very weak on the day. On Friday, oil bounced a little bit on Friday as well, but also weak on the weekly. If we look at metals, you could see, off the year, gold is not that far down compared to some of the other markets. Silver is, but we'll take a look at gold and silver, and they're both in the penalty box, I like to say. Copper had another weak week, as did steel and iron ore. All of those except for copper bounced some on Friday. The dry shippers have been weak, and as we've talked about before, I always like to look at the Baltic Dry Index, and when we broke down below this trend line, I knew it was time to bail, and I think they will remain weak until this turns around. Interest rates, we could see in white that on the 10-year and the 30-year, rates went up this week, and maybe this is good news. The credit risk actually turned down, but as you could see, it's the kind of thing that bounces around, and it's the longer term trend that's concerning that it's up, and that what I talked about last time and several other presentations is that this was 2019, late 2018, early 2019. This was the February, March 2020. This is 2022. We have taken out the 2019 highs, and you could see what happened in 2019 after the credit risk went up. So hopefully the damage is already done and this will come down. Still something to watch. And then we continue to bounce around the inversion of the yield curve. And this is the 210 yield curve. And to me, it's just a sign of the economic concerns of recession. I'm not sure that hitting it multiple times turns out to be multiply bad. I think we already know the risk of recession is there, and I think that's what this is telling us. Overbought, oversold, a mixed picture. Stocks above the 200 on the week dropped a bit. Stocks above the 40 on the week went up a bit. Stocks 13-week new high, new lows reduced. None of these are meaningful. They're all minimal changes. Economic news for the week, we got a bunch of things. We got some inflation expectations on Monday. We got Fed speakers on Monday, on Tuesday, on Wednesday, and on Thursday, and we may hear some of the things that we heard about in the Fed minutes, which was the concern about forcing a recession by tightening of the market versus runaway inflation and lack of confidence in the Fed if they don't address the inflation risk. They're in between the proverbial rock and a hard place. Other things to look out for: CPI on Wednesday for the month will probably be meaningful. It's June, so it's backward looking, but these have been moving the market. What else? The PPI and jobless claims on Thursday, and retail sales, manufacturing, industrial production, inflation projections again on Friday. So I think I got to say that's a busy news week. Not so busy on earnings, but there's some big names here. Well, popular names: Pepsi, Delta, and then the beginning of the bank earnings with Morgan Stanley, JP Morgan, Citi, Wells Fargo, and so on and so forth. As I used to say in the PowerPoints, it's a judgment call to hold stocks over earnings. It's bad judgment to not know when your earnings dates are, and I'll just leave it at that. Expected moves last week, another crazy week in the market, and you could see that across the board on Monday they opened and on Tuesday, and then the market sold off. And then there was a reversal, and you can see the S&P traded higher the rest of the week, closing just below the top of the expected move. The Nasdaq actually closed above the expected move. The Dow again rallied off a weak Tuesday and closed up near the top, same as the Russell. And then the VIX actually closed within its range, and the dollar closed outside. So, again, when you expect 80, 83% of the time stocks and futures and indices to close within their expected range, week after week over the last month, the volatility has been so much that we've been closing outside the expected moves an untoward amount, which I think is just a signal of the volatility. Thoughts: equities climbed during a holiday shortened week along the Dow, S&P, and Nasdaq to reclaim the bulk of their losses. These are the actual 4-day returns, and you can see the outperformance of the Nasdaq. Still a bear market rally. As I showed you, lots of news this week. The Fed minutes were concerning about recession versus rate hikes. We'll probably hear more about that from the speakers. Light week of earnings. Weak breadth, rising dollar and 10-year rates remind us that this is a bear market rally and at risk any moment of failing. And if you feel the need to play small with a short leash. Some things are working like biotech, but they are way off their old highs, have lots of overhead supply, and I should add, some of them have had a big move already. Remember, cash is a position, and if you think this market is turning lower, one way to play it, if you can't go short, is to think about the contra ETFs. And again, shameless plug, don't forget about the Wealth 365 event starting Monday. And if you are the last person in America that has not registered, please consider using my link. It will be in the YouTube under Show More to make it easy on you. All right, now let's kill that one, save it, and let's go into wealth charts and take a look at what's working and what's not working. So the first thing I want to do is I want to call out that if you look at seasonality, and again, this is last week's dates about this time, so it's the 12th instead of the 11th to the end of August, and you could see, for example, technology is up 8 out of 10 years, averaging 4.13. If you look at the next 8 weeks by themselves, you could see that of the 11 S&P sectors, here's the SPY, so it doesn't count, 3, 4, 5, 6, 7, 8 of them are positive. 2 of them do not have 10 years of data, so they won't show up here. And the only one that's negative has been energy. So we're still in a strong seasonal period of time. Take a look at the indices, and let's just pull up here and let's look at the S&P 500 or the spiders here. And I guess the important message is that the spiders have not yet set a higher high, but if they can get up to and perhaps even break over this 50, then we'll be in a scenario where they could take out this high from June 28th and ultimately start addressing the high from 610 and going back into this level here in early June. Do I think we're going to get there? No. But if we got above this level, I would be a lot more impressed with this rally. So my target number 1 is, can we get above the 50? And then the target number 2 is going to be getting above these highs. And then the third target is, can we get above the 200? That's to the upside. To the downside, I think the January 2020 highs are in play on a number of indices, but we're way off of those right now. So the low here was about 350, excuse me, 361. So if we went back and took out that low, then 350 to 360 would be the shorter term downside. Let's hope we rally continues. This is an EMS signal. The daily bongo is our friend here. Um, let Just so I don't sound too bullish, keep in mind that we are still dealing with leg 1 down, leg 2 down, and this is leg 3. Now, was that it? This was that February 2020 highs. And are we done going down? We could be, and we'll know that in hindsight. Right now, I think it's okay to have some short-term positions to the long side, but I don't think we've resolved this at this point. What I thought was also interesting is when you look at the NASDAQ pulled right into that daily 50-day moving average and failed. Now, it still closed very strong on the day. We know the NASDAQ from talking before had the best move on the week. And even though it sold off in the morning with the rest of the markets on Friday, it closed up on the day. A break above that 50 would be outstanding. Failure, and then you start needing to wonder, are we going to come back and retest back here at the lows from early June? And then this is the February 2020 highs. Okay. If we look at the Dow, similar picture, although it was weaker with the doji not up on Friday, still coming into resistance. And again, so is the Russell. So I think it's the summer holiday rally versus the 50-day moving average, and we'll see who wins. VIX remains low, and the dollar is high. It's at an area that it's reversed some in the past. It's extended, and it's gone sideways 3 days in a row. But if we want to see the bulls win the battle of the 50, it would be nice to see the dollar come down. Now, I use gamma charts, and I'm not going to really teach today. I'm just going to call out what I'm seeing to sort of give me a sense of what the market's doing. And on the way up, this yellow one here, which is the 50-day moving average, really acts as support. You can pierce it, but in an uptrend, you don't really go too far. Notice that we're now in a downtrend. It's reverted, so it's the closest to price, and we're coming into it again, and we've reversed at it several times. So that would be another thing that talks about resistance. I've made some comments that gold and silver are weak. Here they are, and you could see when you look at them compared to their 200-day moving averages, which have been crossed to the downside by the 50 on both sides, they are down in the penalty box and certainly don't look very enticing. Energy's been all over the place. It had gone up very high, broke the 50 on high volume, got back above it, and immediately failed to retest, and then came down and had this reversal candle, which we talked about, I think, on Tuesday or Wednesday, as being a probable reversal. Now, still don't know if oil is going to get back above the 50. It seems like the big momentum down has resolved, and there are a lot of energy stocks, whether they're producers, services companies, integrateds, that are sitting on their 50 and looking like natural places to reverse if there's any strength in oil. Gas has bounced off to 200, but really hasn't done much. One thing that was a negative last week was the 10-year actually turned around Wednesday, Thursday, and Friday, took out the 50. So like the dollar, if you're bullish stocks, you don't want to see this up. And it's actually taken out 3.1% on the 10-year rates. I saw something today that car loans are at the highest rate that they've ever been. Market theme, on the big picture, it's still large caps and value. But when I break it down to the daily, you could see that we're not up at the upper right-hand corner, excuse me, on the hourly rather, but we've actually started to show neutrality. And since we were heavy towards large caps, that shows a little bit more interest in small caps. And the other thing that you'll see on the hourly is that growth is making its move. So I think there's evidence that this market is rotating again, and if it rotates, you want to make sure you're in the right place. If we look at the S&P 500, these are hourly ratio charts. So we've neutralized the different numbers by setting them against the spider. And what do we want to see? You want to find those groups that look like, well, let's look at discretionary and technology. They're not up at the upper right-hand corner. Nothing really is. But what you see is green shoots that these have come off their bottom. And the strength right now, to me, on a very short-term basis, is technology, it's discretionary, and it's probably communications, and that healthcare is holding up well. Now, healthcare has been leading the market for some time. Just look at the biotech ETFs. But staples has weakened, utilities has weakened, and real estate has weakened. So, does that mean that some of the more risk on plays are moving up and the defensive plays are taking a breath? Wouldn't that be nice if you still have long holdings? If we go into the dashboards, so the dashboards are a series of scanners that I will look at on a regular basis. Let's look at sector scanner here. And sometimes this is, I don't want to say confusing, but it may look different than the S&P 500 and the S&P 1500, and that's because it's extremely broad in the number of stocks that are captured here. 1,293 healthcare, 2,119 industrials, 1,000 technology. So sometimes the percentage returns will look different to you. If we look at the weekly algo score, it shows me utilities and energy, interestingly, are still showing something, and then staples and healthcare. If I look at the daily algo score, I see technology and consumer cyclical. I guess that's where discretionary is, are actually making a move. To me, this feels like rotation. So as a top-down trader, just to give you a sense of how I look at the markets, the first thing that I do is I identify where I think is leading. And healthcare has been leading for a while, so let's just talk about healthcare. Then I can hit compare, and then the different industry groups within healthcare come up. And it's pretty clear that healthcare plans, biotech, pharma, diagnostics, and medical distribution have been leading, but they're all strong. So let's just include them all. Then I can go to compare again, and it brings up all the stocks in healthcare. So what I could do is this. I could take all those stocks, and let's just go to my watch list real quick. And in watch list, let me see, do I have one for healthcare? Let's add a new watch list. And let's call it healthcare 7.10.2022. Create the watch list. It's telling me it's created there. And now, let's go back to the sector scanner. And let's go to the funnel, default watch list, and let's change that to healthcare. Apply. So here it's saying my watch list was updated successfully. And now let's add to the watch list the stocks in healthcare. So it's going to open up again. There's a lot here. Now, I may have gone over the limit. Let's see if anything populated there. You can wait. Yep, there it goes. It was such a big number, it took time. So, no error message, just Jeffrey not wanting to wait. Let's go now. So we've now dumped these stocks into a watch list, and now I can play with them. I can go to Wealth Scanner, for example. Now, Wealth Scanner, I typically use this to understand what's working in the market. And just to remind everybody, I've cut my time frames and switched to a day trader for the purpose of market rotation. And so these are going to be much faster than as a swing trader. I still am a swing trader, but I'm thinking that market rotation is occurring, and I want to make sure then I'm ready to make the move. So we've got biotech and pharma and biotech as leaders, followed by dollar, solar, genomic, China, healthcare, and then interestingly home construction. But notice we've now dropped below 200. So if I was going to focus on where the strength of the market is, I'm still looking at pharma and biotech. And we've been talking about DQ and JKS for a couple of weeks now. The TAN, the solar stocks look interesting. Now, what I saw down here was interesting is FANG. Is it possible that FANG is going to start moving? Wouldn't that be great if Google, Amazon, Meta, Netflix, Apple started to lead again? And then here's ARK. And I guess they're on fire. That's why we have the new flame, which is one of the changes, I think, in the updates that Wealth Charts has in preparation for the Wealth 365 event. Now, remember we took that healthcare? We could find that healthcare, and I don't even know what we're going to get here, and launch it in here, and let's see what comes up to the top. There's a lot of stocks there, so it's thinking. And then you could find, and as I look at this, I'm very pleased with what the list shows me, because these are some of the stocks that have really led. Waters Corporation, don't know much about them. I believe they're going to be on the technology side, but you see we've broken out here. Harmony Biosciences has been doing well for a while. It pulled back on Friday. DVAX is one we talked about as it came up to and then broke above the 200-day moving average. So you're able to find the leaders by doing this. A couple of stocks that in healthcare that I've been interested in, and two that I would be putting on my watch list looking for this week. One might be Lantheus rather. And why do I like Lantheus? I like Lantheus because it's been in a huge uptrend and then a pullback, and now it's given me a chance to get in again with an EMS signal. Big volume, a breakout of momentum from a squeeze. It's only at 50% on the high-low jump, so I know it's not extended. And you could see how strong relative strength is in volume on both the daily and on the weekly. And another healthcare stock that I like a lot is INMD, which was a leader a while back and has been lagging. And the reason why it showed up was similar, that it had the three green dots for breakout momentum and volume from a squeeze. But you notice the charts are very different. This chart's going to have all kinds of overhead supply and risk to it, and therefore I would give this much less of a leash. So I just wanted to contrast a stock that's been beaten down and is a turnaround play and talking about all the overhead supply risk that you see over here versus LNTH, which is a stock that has a pullback and an uptrend. Now, if you've watched me for any length of time, you know that I'm constantly talking about buying pullbacks and uptrends. The challenge of the market that we've been living in is there really haven't been a lot of pullbacks and uptrends. Now let's move over to the weekend review stocks, which is my top-down list that I created prior to doing this live. And actually probably didn't want to put it there because there's a lot of stocks. We'll let it do its thinking, and it's going to show from my top-down list what the leaders are. But what I want to find is, you look at Waters, and this is great. I've got nothing against it, but I want to find it when it's breaking out, when it's moving. CCRN, Cross Country Healthcare. This was on my list last week, and you could see back here as it's breaking out, you have the green dots coming out of a squeeze. How about finding stocks before they've run away? So I can go into CAT Scanner, let's drop in the weekend review, and let's just rank things by dots. And let's see if anything will come up. So we've got a lot of stocks here. So let's go down and let's look at a couple of these. MRC is an oil services play. As I mentioned, a lot of this is going to be dependent on the price of oil, but My guess is that this stock goes higher if oil stays the same or drops a bit. Look at what it has here. Big gap up with volume, a breakout in momentum, all occurring on the same day, Friday, with an EMS signal. And that's a really strong looking chart. And this is a long-term uptrend, pull back pretty hard. So that one I would add to my consideration. And then big lots is going to be a lot like that overhead supply story that we saw with INMD, where this is a stock that's been beaten up, but it had big volume, breakout of momentum, and a daily bongo change on Friday. And again, think about all the overhead supply here. And that's the challenge after markets have big sell-off. Now, McKesson is different. McKesson is a healthcare distributor. I know this sector very well, as I've sold 2 businesses to AmerisourceBergen and 1 to Cardinal Health. And McKesson is really outperforming despite all the opiate issues that they've been involved in, the other distributors. And you could see that on Friday we had volume, breakout, and momentum. Now, this is a stock that it felt like it could be extended, but it's really not. It's only at 55% on the high-low jump. So McKesson is another one. So what I'm trying to show you is that by using the scanners, I'm able to pull up the stocks that are working now. Yes, it's wonderful to know what the best stocks are in the market over a longer period of time, but the scanners are letting me go in and see what's working now. What else looks interesting? And I've looked at most of these during the weekend. Centene Corporation. This is one that it's kind of messy from all over the place, but here's a stock that's been in a long-term uptrend and pulled back, and you can see it broke out on Friday with high volume. Okay. CSIQ is another stock in the solar space. So if it's not JKS and it's not DQ, then it's potentially a laggard compared to the others. And here it is, a breaking out above the 200 with momentum, with volume rather, on Friday. So again, each one of these stocks has some interesting findings. If we're thinking technology, how about Maxilinear? Now again, like most of the stocks in that industry group or sector, you're going to see big downtrends. Now, is this the done? Is it done going down? I don't know. But here's a stock that broke out on volume on Friday. So the scan is set up to find the stocks that are working now. Now, I can look at anything. I can look at, how about solar? I know I have a solar thing right there. And it shows me here CSIQ. Renesola also with 2. Similar pattern, big sell-off, but coming out of a squeeze with a PSAR reversal, breakout momentum, relative strength in OBV turning up, and the EMS signal is there. Enphase and Solar Edge also looked interesting. Enphase, you could see, is already beaten off much of its overhead supply. You'd have to go back here to November to get to this high. And this one on Friday had 3 dots, or actually it had 1 dot on, Thursday it had 1 dot right here. And on Friday it had big volume, momentum, and a breakout from a squeeze. So this is another one that's moving. I love wolf packs. Wolf packs would be multiple stocks in the same group that are working. Now, if we look at oil, gas, and to see, does anything have a lot of dots besides MRC? Well, BCAP is too small. Volume. DNOW is another services stock. Again, deep in a pullback. Breakout in momentum on Friday. DRQ is a driller. It used to be an expensive stock. Again, a lot of things moving off the bottom. What about biotech and pharma? Does anything pop up there? So I've got these groups set up so I can quickly look through and do sort of a top-down just by looking at my favorite groups. Something happened with Oramed on Friday. I looked at the news, and I don't know if this is a mime stock or people are getting excited about a diabetes treatment that's in development, but I'm going to do some research on it because something big happened here. And you could see the big move it had on Friday. So I hope you find this market analysis to be helpful. Yes, I could look at 1,000 charts, and you know what? I did this. I did this today. I built a watch list. In fact, I looked at 1,000 charts, and then just from my bottoms up approach, I come up with a buy list, and then I add to it the stocks that we're looking at through my top down approach, which I just did through wealth charts. Some of the stocks that I liked on my buy watch list, since we're still at only 40 minutes, these are stocks that actually are showing bullish signals on the scanner. We've looked at most of them. Costco really looks strong here, but it's got that 200-day ahead of it, so that would be somewhat concerning. So let's just go into my watch list here. Well, maybe we're not going into my watch list. All right, don't know why that's doing that, so we're going to not worry about it. Let's pull up my buy watch here and see what the strength is. Okay, so here's that Dynavax that we already mentioned earlier as a stock that's broken out. Cyroport is another specialty pharma or device stock. PRVA, private healthcare, is a big leader right now. Love that chart. So there's a number of stocks on this list, including LNTH, which is one that I think looks really interesting here as well. So on that note, I think I've shared with you a number of stocks that you could be putting on your watch list. I'll talk to you again on Wednesday live at the Wealth 365 event, and I'll have things Tuesday and Wednesday morning posted on my Stocks and Docs site. You all have an awesome Sunday. Hope you enjoy this. Please leave remarks, and we'll talk to you again soon.